Hello, ladies and gentlemen. Good morning to you, and I'm so excited to welcome you to another promising session of our first morning live show for the new week. I hope you all had a wonderful weekend, and kindly please confirm that you can hear me by typing a comment in the comment section so that I can get a positive feedback that we are good to go this morning. And for those who are joining us for the first time, you are highly welcome. And what we simply do here on a daily basis is to I normally share a series of publications during the course of the weekend where I publish instruments that we are going to be monitoring for the week. And for this week, we have the GBPUSD, the USDJPY, the XAUUSD, and the USOil commodity. All this will be on our watch list for this week. And I talked about this. I reviewed these pairs from a technical standpoint in these videos, and this will also give you a background knowledge of what we are going to be talking about today. So what I simply do here is to review the 1 hour time frame, which actually is our execution time frame. So it is very important that you watch this video so that you can have a background knowledge of what we are going to be talking about this morning. And for the sake of simplicity, I was able to give you the link in the description box of this current video, so you can check the description box below to have a look at this video so that it can bridge the gap between you and I. And okay, I can see your comment, Mahan. Good morning. Thank you very much, and trust you are doing well this morning. So with that being said, let's dive right into the business for today. So as usual, the first thing we normally do here is to keep tabs with the fundamentals. So we want to look at what is really happening from the economic calendar. You all know that whatever technical positions we are taking ahead of the trading session, we still need some catalyst that will be driving the liquidity in the market, and without liquidity we cannot see price movements that will make us make profits of the market. So we want to look at the economic calendar to see any macroeconomic event that we can look forward to, so that we can position ourselves in such a way that we can catch any potential move prior to the event or after the event. And considering the pairs that we are going to be monitoring for today, we are going to be focusing on events that will be affecting the US dollar, the pound sterling, and the Japanese yen. And from what we look at, we found here there are no high impact macroeconomic event to look forward to. So I would rather focus on a high impact event. Though we have something coming in for the pound sterling in about 4 to 5 hours from now, and that is the Bank of England's Conliffe speech. Conliffe is the Deputy Governor for Financial Stability of the Bank of England. So he's going to be having a speech, and this will also be giving us insight into the bank's financial policies and the monetary policy of the UK economy. So this is one event everyone will also be looking forward to in terms of the pound sterling US dollar. So aside that, we don't have any other macroeconomic event to look forward to. So we shall be diving right into the chart using our technical skills to identify potential trading opportunity during the course of both the London and the New York session today. So with that being said here, let's dive right into the chart. And the first commodity we are going to be looking at, as usual, is the US oil. And on the US oil here, I already shared something during the early hours of today. If you have been following me on my TradingView platform and the Telegram platform, you would have gotten this update, and this was what I was able to identify here during the early hours of the week. Remember that we had a channel on the 4 hours time frame. For the sake of clarity, let's run through that quickly. so that we can have the background knowledge of what we are talking about here. So this is the 4 hours time frame, and our center of focus is around that beautiful channel between the $83.40 level and the $79.50 area. And this happened in the last within the last 2 weeks. We saw this consolidation phase happen in this market, and what this simply tells us is that price action participants in this market are actually caught within an indecisive phase. And not until last week we saw the breakout of that $81.50 level, making that area our key level for this week. And if we consider what has been happening behind the scenes in terms of the fundamental aspect of the US oil, remember a couple of weeks ago I shared with us here that the OPEC Plus members decided to cut oil production by 1.6 million barrels per day, and that is starting from the month of May. And this dovetailed to a total of 3.7 million barrels of global demand, which is quite on the high side. And everyone is expecting that because of this, there might likely be a high demand, which will definitely skyrocket price. But as you can see, the market has already reacted immensely well to that a couple of weeks ago, as we saw that bullish gap at the beginning of I think 2 weeks ago, the beginning of that week, we saw this bullish gap here, and we have an indecisive phase around this area. Now if we scale down into the 1 hour time frame, this was what I was able to identify during the early hours of this week. And what you will notice here, if I zoom in here, please let me know if you can see my screen. So I'm trying to zoom in out so that you can see things clearly at this point. So what we identified here during the early hours of today was the fact that price action has been trapped within a channel just within the $82.60 level, as you can see here, and the $82.20 level. And you all know what we look out for whenever we have this kind of simple setup. We either want to see price action break out of that channel to the upside for buying opportunities, or break down the channel to the downside for selling opportunities. And with the case here, I'm tending towards a bullish momentum, considering the fact that price action has been bullish for quite a while. And following the breakout of that key level at the $81.50 level, we should be expecting that price will come back to do a retest of structure, which actually happened during the later part of last week, as we saw sharp rejection of that zone just right above the $81.50 level. And I'm of the opinion that price action will continue to the upside in the direction of the proud leading price action, where a breakout of the $82.60 level, and then price will further break out of that resistant line at the $83.40 level to signal more opportunities to add more position to our existing trade. And that is how I'm expecting things to go this week. That is, we are going bullish. But as you all know what we do here, whenever we have a bias, we always try to take into consideration the potentials of the sellers too, as well, as we also need to balance things out. We don't want to get too rigid. The financial market is a very fluid environment, and for us to be profitable in this market, consistently profitable, we need to be as fluid and flexible as possible. So in as much I'm looking forward to a buying opportunity in this market, we cannot ignore the potentials of sellers at this particular point in time. And to further buttress the presence of selling pressure here, what I did this morning was to highlight and connect the series of lower highs, as you can see in this market. Though I'm seeing this as a retracement phase, but let's take it into consideration as well. And what do we want to be seeing on the chart that will confirm that we can actually sell the US oil this morning? So we have a support line at the $82.20 level, where I need price action to break down that structure to give me a signal that we might be going bearish for probably the first half of the week. But one thing about this current structure is that we are not going to be jumping into a sell position here. So that means we are not having a sell stop order at that juncture, as we still need some confirmation that will give us a clue that sellers are gradually gaining some momentum. And what we want to see in this kind of scenario is a breakdown of the structure happen. We scale down to our lower time frame immediately to look out for confirmation, which will definitely reflect on the chart as a retracement back into structure, like a retest of the $82.20 level or the trend line here. We are selling pressure on our lower time frame will give us that confirmation to join that decline to the downside. And one thing about this decline here is that it's more or less a counter trend opportunity. If we take into consideration what has been happening in the last couple of weeks, you would remember that we had a strong demand zone around the $79.50 level, which led to the breakout of that key level at the $81.50 level. So if a breakdown of that support line at $82.20 level happens, it's more or less going to be a counter trend opportunity. And as a result of this, we want to be on standby to ensure that as soon as price action moves in our favor, we want to be moving our stop loss accordingly to lock in some profit. So if price action gradually moves to the downside, we want to be moving our stop loss accordingly, locking in some profit as price action goes on to the downside. Then if a further breakdown of that $81.50 level happens with selling pressure below the structure, we would have no choice than to add more position to our existing trade. So this is how we are going to be trading the US oil for today. So we have a simple channel already identified between the $82.60 level and the $82.20 area, where I have said we are looking forward to either a breakout or breakdown of this channel for trading opportunity. So in this scenario here, I have a buy stop order above the $82.60 level because I'm still tending towards a bullish momentum in this market. But if it happens that a breakdown of this level happens, I have told us all that we need to remain very patient here, as we still need some confirmation to happen, which is likely going to come in the form of a retest of structure. Selling pressure resumes, we start seeing signs that buyers are finding it difficult to climb above that structure, then we could actually join that decline to the downside. So these are my views here on the US oil. If you have any questions, let me know right in the comment section, as I will be continuing to the next pair for today. So the next instrument that we shall be looking at today is the GBPUSD. And on the GBPUSD, we have a simple situation here where price action is currently trapped within our key level area. Remember, if you had watched my GBPUSD publication during the course of the weekend, you would understand how important the 1.2400 level is around this area. And if you had not watched it, please do, so that you can have a background knowledge of what I'm talking about here, and you will be able to understand how we got to this point. The link is in the description box of this current video, so you can check it out after the live session. So right now, since the beginning of the week, we have seen a situation where price has been trading between the 1.24200 level and the 1.23840 area to give us a flat channel to work with for the week. And remember, the 1.240 level was our key level in that video. Price action is just currently trading around that area, hereby giving us a clue of how important that structure is. Then another thing about that area around the 1.240 level is the fact that it shares a beautiful confluence with that bullish trend line we identified in that video. Now, for the sake of clarity here, let's go into the 4 hours time frame where I shared with you how I identify that bullish trend line, and you can see what we have here on the 4 hours time frame. So all I did here was to take into consideration price action activity since the beginning of the month of March. And one thing obviously that you will see on this chart is the fact that price action has been bullish, and after connecting the series of higher lows in this market, you can see that we have a bullish trend line here. And if I zoom into how the week closed last week, you will see that price action closed exactly around the 1.240 level. And one interesting thing about this closure is the fact that it falls right on that key level at the 1.24 area, which also shares a confluence with that bullish trend line, as you can see here. At this point, anything could actually happen. If buy pressure resume around this area, price action could respect that bullish trend line one more time to inside another wave of bullish momentum. However, if price action breaks down that trend line followed by selling pressure below that structure, definitely we want to be looking forward to a sell-off in this market. And now, with the information we have gathered here on the 4 hours time frame, if we take a closer look at what has been happening around that trend line and the 1.240 level since the beginning of the week, we begin to understand what is really going on there, and we will be able to position ourselves ahead of both the UK and the New York session. So scaling back down into the 1 hour time frame, so had laid emphasis on that new structure that we have here, which is right within the 1.24200 level and the 1.2343840 area. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistance line to the upside for buying opportunity, or break down the support line to the downside for selling opportunity. And I actually did an update on the GBPUSD this morning on my TradingView platform and my Telegram platform. And one thing I said here, let's go through the commentary on that one. So here we are on the TradingView platform, and this was my first commentary for this week. And I said the early hours of the day I've seen price action oscillate around both the key level at the 1.240 level and the trend line, hereby forming a channel that will be what we are using to guide trading activities today. However, a breakout of the channel will need some sort of retest on the lower time frame for a confirmation that price action is going bullish. Now, what do I mean by that? Now, what I'm simply saying here is that even if price action breaks out of the 1.2420 level, we will still need some confirmation for us to join that rally. And the confirmation, definitely as soon as a breakout of structure happens, you know what we do. We scale down to a lower time frame. It could be your 5 minutes, your 10 minutes, or your 15 minutes time frame. We want to look out for a retest of structure, giving us signs that buyers are gradually gaining some momentum. So what we will see instead is buy pressure before we join that bullish move to the upside. So that is what we are going to be looking at before buying. So we are not having a buy stop order above the 1.242 level, but we are going to be holding on for a breakout, then scale down to the lower time frame. Look out for a retest of structure, signs that buyers are continuing to push to the upside, sellers finding it difficult to break down the 1.242 level, then we could join a bullish momentum at that point. Now, the other situation here is a breakdown of the 1.23840 level, which for me at this point is reasonable for us to have a sell stop order below that structure. Hold on a second, please. Hold on a second, please. I'm having a power outage issue, so I'll be sorting that out in a moment. So you're welcome back, everyone. I'm so sorry we had a power outage and I needed to change power supply before we can move on. So we are right back on the chat, and what I'm trying to say here is that we are going to be having a sell stop order just right below the 1.23840 level to join a decline to the downside from this area. And the reason why I'm having a sell stop order here is simply because of this consolidation phase here. This is more or less looking like a flat channel, and whenever you cite a flat channel following an impulsive move to the downside, this has a high chance of transitioning into a bearish rectangular pattern where a breakdown of the 1.23840 level will trigger a sell position retest of structure, giving us more confirmation that sellers have gradually gained some momentum to push price further to the downside. So in that regard, I'm having a sell stop order there, which I explained on my public platform, and let's see how price action will be going from there. Our stop loss will be somewhere right above that resistant line at the 1.2420 level, which will be dovetailing to about 35 to 40 pips thereabout, which is not bad at all. So let's see how price action plays out from this point. If you have any questions, feel free to drop it in the comment section and I will be willing to be of help. Now, with that being said, on the GBPUSD, I will be moving on to the next pair, which is the XAUUSD. And the XAUUSD, we saw how the gold actually found a new high at the $2,048.50 level during the course of last week's trading session before we begin to see selling pressure. And the sell pressure we saw here was following the speech from the Fed governor. What is her name again? Christopher Wallace. She talked about the monetary policy and she laid emphasis on the importance of tightening monetary policies. And what we can phantom from that is that there is a high chance that a rate hike will be coming in next month. And you know, when a rate hike is coming, it always favors the dollar in the sense that people will want to invest more in the dollar so that they can make off the interest that has been increased. And what we are going to be seeing might likely be a bearish move on the XAUUSD. Then another thing I would like to state about the XAU, about this current structure, like I used to say in my previous analysis, that whenever price action finds a new high, there is this psychological thing about that area where the emotions of fear, uncertainty and greed comes in around that area, and you will see it reflect on the chart in the form of a choppy situation, like a retracement consolidation around that area. And as you can see what has been happening here, we saw how this area has been seeing some selling pressure leading into that price going to the downside. The same thing also happened when price auction hits a new high at the $2,000 mark. I think about 3 or 4 weeks ago, we saw consolidation phases around that area, retracement phase, price action drop to the downside to gain some momentum to be strong enough to break out of that structure, which later happened at the beginning of this month. Now we have a similar situation right now where price action has been caught within a consolidation phase leading into a retracement phase to the downside, and at this point we have price action back at that $2,000 mark at the end of last week's trading session. And because of this situation here, we had the $2,000 mark as our key level for the week. Remember, if you had watched that video, the link is in the description box below. You will see how important the $2,000 level has been with this current structure. And one other thing that makes this confluence very interesting is the fact that it shares a confluence with our trend line. So if I go up a little bit into the 4 hours time frame here, you will see how the $2,000 MAC level shares a beautiful confluence with that bullish trend line that we have here. And with this, you would agree with me that we are at a critical point in the market right now where anything could actually happen. We could have price action respect the trend line one more time to incite another wave of bullish momentum, and we could also have price action break down the trend line to incite a sell-off in this market. So these are the two scenarios that we are going to be monitoring during the week, and most importantly, what we want to be doing is to see how participants in this market will be reacting to that $2,000 MAC, which also shares a confluence with a trend line since the beginning of this week. And when we scale down to our 1 hour time frame, we begin to see things clearly. Let me zoom this in so that you can see. I hope you can see my screen. So since the beginning of this week, we have seen a situation where price has started with a choppy situation between the $2,006 MAC and the $1,996. So that was like a $10 range around that area before the breakout of that $2,006 level happened. And this is more or less a sign that price action may likely be going to the upside after it broke out of that resistance line. But one thing about this current structure is we will still need some confirmation to happen before joining that bullish momentum. Now, the reason why I say that we will need some confirmation to happen is simply because of the fact that price action has been bearish. So we had an impulsive leg that led into this old structure that we have here. So it is very important that we wait for a confirmation to happen, and if it does happen, it's going to be looking like a retest of the structure that was broken, where we start seeing buy pressure resume above this level. Then we could get ready to buy at the breakout retest of a reversal pattern on our lower time frame to join that move to the upside. Now, one thing about this move, if we consider the previous impulse leg that is bearish, we want to see this as a counter trend opportunity. So that means that we want to be on standby to be around the chart to monitor price action. So as price action moves in our favor, we move our stop loss to secure the position. So as soon as it moves very well, you can move your stop loss to break even, secure that position in such a way that even when price drops back to the downside, the worst case scenario is you will be taken out at break even. Then a further breakout of the $2,025 level retest of that structure will welcome more buying opportunity in this market. So that is how we are going to be looking out for buying opportunity today. So as long as price remain above the $2,006 MAC, we continue to look out for buying opportunity and more opportunities to add more position to our buy trade. Now, what if the contrary happens in this case? That is, if price action drops to the downside, what are we going to be doing? What do we want to see on the chart that will give us that confidence to be able to sell the XAUUSD from this current structure? Now, if I zoom in here, you will see that we already have a flat channel, and obviously you know what we look out for whenever we have a flat channel. We either wait for a breakout or breakdown of that structure for a trading opportunity. Though we have been seeing buy pressure resume around the 1,996, which makes it unlikely for a breakdown of that structure to happen. But if it does happen, we should be having a stop loss, a sell stop order, right below the 1,996, where we want to be looking out for selling opportunities. So a breakdown of the 1,996 should be triggering a sell position for us in this market. And one thing you should also note that once a breakdown of the 1,996 happens, definitely the trend line which has been guiding bullish momentum for the last 3 to 4 weeks would have been broken to the downside, and that will be the first time price action will have broken down that structure, which also will be a significant signal that we are going to be going bearish. So below the 1996 remains an area we shall be looking out for selling opportunities in this market, while above the $2006 mark remains an area where we look out for buying opportunity. And for those who had actually bought above the $2006 level right away, well, it's okay, but I will be advising you to move your stop loss right now to your entry point to secure this position, as there is still a tendency that sellers could still come in this market. So let's be mindful of this while we monitor price action from this area, and be rest assured that I will be with you on my public platform, both the Trading View and the Telegram channel, to give you an update whenever there is a new scenario or setup lining up on the chart. So with that being said here, if you have any questions, let me know in the comment section, and I'm willing to be of help. And in that regard, I will be moving on to the last pair for today, which is the USDJPY. And if you recall, last week the USDJPY was one of our most profitable trade, as we bought the USDJPY throughout the course of last week, as it was more of a bullish momentum. However, this week here we had, if you had watched my video, my publication on the USDJPY, where I explained in detail from an holistic point of view what is really going on the higher time frame and how we got to this point. And from what we identified on the video, we realized that the 133.800 level is going to be serving as the neckline of that potential reversal pattern we identified on the daily and 4 hours time frame. And we all agree that if price action remains above that neckline, definitely we shall be using it as a platform upon which we are going to be buying the USDJPY for this week. And for the sake of clarity here, let's run through the 4 hours time frame so that we can see what it actually looked like on that 4 hours time frame. So this is what we had on the 4 hours time frame here. And we can see that price action closed last week had the 133.800, a level which has been a strong selling niche in this market since the month of March. And you all know that this kind of situation here, where we have been seeing selling pressure around that area, we will need a breakout of that level to give us a signal that buyers have actually taken out all the sell positions around that area. And that gives us, and that makes us to scale down to a much lower time frame, where we want to see how participant in this market has been reacting to that neckline since the beginning of the week. And so in that regard, let's scale down to the 1 hour time. I will not be able to go into the details of how we got to this point because of my time, and that's why I would suggest that you watch that video. The USDJPY link is in the description box of this current video, so you could watch it and see how we got to this point. So going back into the 1 hour time frame, this is what I was able to identify right above the 133.800. Well, it is quite obvious that it has been a little bit bullish this week, as we saw price action has broken above the 133.800 level, which happens to be the neckline of that reversal pattern we identified on the daily time frame in that video. I said it's in the link. Now we have a situation here where price is currently oscillating between the 134.200 level and the 133.710 area to give us a beautiful indecisive phase that we shall be using to guide our trading activity for today and probably for the later part of the week. Now, you all know what we look out for whenever we have this kind of simple setup. We want to be patient to wait for price action to either break out of the resistant line to the upside for a buy opportunity, or a breakdown of the structure to the downside for selling opportunity. And so with these expectations here, we're having a buy stop order above the 134.200 level, where the high chance of this structure here turning out to be a trend continuation pattern is very, very high. So a breakout of the 134.20 level should be welcoming a buy opportunity here, where our stop loss should be somewhere right below the 133.800, which will be dovetailing to about 40 to 45 pips stop loss. So that is how we are going to be buying the USDJPY today. So anywhere right above the 134.200 level seems most appropriate to join a potential trend continuation to the upside. Now, in as much as we are looking out for buying opportunity here as well, if you had watched my video on the USDJPY, I told us all that we cannot ignore the potentials of sellers in this market. As you can see, price action has been bearish in the last couple of months on the USDJPY, and there is a likelihood that we could have price action resume below the 133.800 level to incite a sell-off in this market. As you all know, the 133.800 has a strong memory for selling power. As you can see, I shared this on the 4 hours time frame. Let's look at it one more time so that we can have a better knowledge of what we are looking at here. So look at what has been happening on this chart since the month of March. You will see how the 133.800 level has been a strong selling niche in this market. It also happens during the course of last week's trading session. We saw how that area has been a strong selling niche. So if at any point in time today price action drops below the 133.800, which will definitely have dropped below the support line we identified at the 133.710, then we should take it as we are back within the selling territory in this market, and the likelihood of price action dropping further to the downside remains very high at that point. So selling below the 133.710 will seem more reasonable, where we want to see how far it's going to go. So if it drops into the 132.350 and breaks down that structure, then we might be in for more selling opportunities in this market. So if we are joining a sell momentum from below the 133.710, as soon as price gets into the 132.350 level, we want to move our stop loss, secure the current position, and let's see how price action reacts to the 132.350, as the way it reacts to that level will determine if we are going to be adding more sell position to our existing trade or getting ready to buy. As you all know, that area 2 has also been a buying niche since the breakout of that structure happened during the last week's trading session. So that is that on the USDJPY, and on this note, I want to be calling it a day here. So it has been a wonderful moment with us, guys, and I'm very sure that we are well equipped to be able to take advantage of any potential trading opportunity during the course of both the London and the New York session today, as we have deliberated, checked out all the possible scenarios that could likely happen based on the current market structure. And if you're still in doubt, definitely I will be with you in the comment section on my public platform, that is on the Trading View, and on my Telegram platform. You can see the IDs is scrolling at the bottom of your screen right now, so you can be part of us there as we continue to monitor price action. So on this note, I wish you best of luck today, and I hope to see you right in the comment sections on my public platform, and at the same time see you tomorrow as we get prepared for another day. Do have a wonderful day, everyone. Bye bye.